Hello and welcome to Crypto Weeklies. In this video, we are going to talk about Algorand and its token Algo, conduct machine learning based price forecast, regression analysis, and accumulation strategies, as well as estimated bull run target. None of the content is financial advice. Over the last 7 days, Algorand has been one of the rallying cryptos, about 25% gain. Price at around 27 cents, market cap about $2.2 billion, volume at around $330 million. In terms of tokenomics, Algorand does have a max supply of 10 billion, out of which about 82% is in circulation. So again, in terms of tokenomics, one of the very few cryptos with L1s which have a max supply and with almost 82% tokens released in circulation. So that that should bode well with respect to tokenomics. Again, none of the content is financial advice, and one way to interpret this is check out the price growth as well as the market cap growth over the last 1 year. If the market cap growth is similar to price growth, then the growth in market cap is getting reflected in price. So you can see two peaks in market cap back in March of 2024. Market cap about 2.57 billion. Now the last rally 2.43 billion. So in terms of price also, price back then in its highs were at around 31 cents. Now it touched 30 cents, but again quite similar in terms of price and market cap growth going hand in hand. So that is the benefit of good tokenomics and most of the supply in already in circulation. So in terms of some of the key levels that we again, this is not the first time we are covering Algorand on the channel. We have covered it all the way throughout the bear market of 2022 and also recovery year of 2023, as well as the halving year of 2024. So these are the key levels identified by our model related to Algo. The green line was all the way at around 18 cents. It was the first resistance for Algo to go to its previous all-time high if it had to go. The second level of resistance is currently where the price rallied twice in 2024 also had a significant time presence in 2022 at around 32 cents. Let's see if the price rallies beyond this level. Has been a resistance all the way throughout 2024. Then the next stop for Algo per the technical analysis is at around 75 cents, and one after that at around $1.43. So having covered all of that, now we'll focus our attention on our website cryptoweeklies.com. Link on the bottom of your screen has machine learning based price forecast and all of the regression and accumulation analysis, as well as estimated bull run target. If you like the content, please subscribe and also give this video a like. This is the machine learning models. Again, all of them are personally developed by me and have spent a lot of time and effort on curating those machine learning models. These are the weekly price action of Algo in white, and based on this price, the model has been trained on this price and uses techniques such as LSTM and XGBoost, as well as ARIMA, to forecast what could happen to Algo in a bull case as well as in a bear case. This is the non-euphoria 1 standard deviation bear bull case for Algo. This is the yellow line. Says the price could go between 28 cents and about 66 cents between now and early May of 2025. If Algo witnesses a euphoria like it did back in the last month of halving year of 2020, if that and early 2021, 4 years after that would be December 2024 and early 2025, the price could be between, per the model, between 31 cents and about $2.53. So the purpose of this model is to hypothesize what could happen to a particular crypto in, let's say, a standard bull market, a euphoria phase of the bull market, as well as in a standard correction, which is this green line, and in the panic zone. Like for example, now that we are not in this panic zone, but again, if we were in a panic zone, then this darker shade of green, and based on these are all based on statistics and machine learning. So this yellow line signifies the 1 standard deviation case. The orange line signifies the 2 standard deviation case with 95% confidence level. So these are the machine learning based price forecast for, again, they are also available in tabular format at the bottom of the chart on cryptoweeklies.com. this is the regression analysis for Algo. The weekly candles of Algo are wrapped around based on this polynomial regression function, which is a non-linear model, helps estimate what is the fair value in a bull market and bear market. In the bear market, the regression function goes down in time with time, and in the bull market goes up with time. Again, you can see the pink value has changed the pink line has changed its shape early 2024, and now the bias is to the bullish side. This also helps identify the trend in the market. Right now the fair value for Algo per the analysis is at around 37 cents, and you can see that in the bull market the price doesn't stop at the fair value, it does go slightly higher than that. So for that we have applied standard deviation residuals, the one standard deviation residuals which above which the price, you can say that above that one standard deviation residual, the yellow line, that's when the market starts being euphoric. That currently is at around one standard deviation residual on the fair value is currently at around 59 cents. A 59-cent Algo would be considered as overvalue or euphoric, like the initial phases of euphoria, when as back in 2021 at around 93 cents, as well as early 2022 at around $1.30. Right now that is the 59-cent level. If on the other hand the price goes to the two standard deviation ceiling like it did back in, that is the end of the towards the close to the end of the euphoria phase, you can see that level is currently coming in at around 94 cents. So with this, the key levels to watch for Algo, first is the 37 cents as we established, and then the one standard deviation residual coming in at around 60 cents. So those are the three levels for Algo to watch, and also helps identify the directionality. The regression analysis helps identify the directionality of the likely price scenario for Algo. In terms of now that we have covered Algo on its regression based valuation, the SMA, the three accumulations model based first on SMA, which is based on simple moving average, and how the price is doing with respect to the 20-week moving average. That's how the daily color codes are assigned, and the risk levels are normalized between 0 and 1. The each color represents a risk level, and the way to interpret this chart is to help identify some of the, let's say the hypothesis is to DCA out of the market when the risk levels are, let's say, above 0.6. You would find the relevant times in the or phases in the market where the risks are higher than those levels. To help, again, you can lower the risk threshold to, let's say, anything above 40% risk. I'm thinking about DCing out of the market. You will be helpful. That would be helpful to identify those risk levels. Again, we had put a print of above 40% back in early November 2024, only one day, and then the risk kind of plummeted after that on 23rd of November. Again, this is the model related to identifying the tops. The second model identifies the bottom better. That we'll discuss the DCA model. First, we'll look at some of the SMA based price forecast or key prices at some of the risk levels. So per this model, a 93-cent Algo would be considered moderate risk in the next year till about $1.20. And some of the higher end forecasts per the model are between $1.26 and $1.46 for Algo. On the other hand, the second model that we have, which has done a great job of identifying the bottoms during the bear market. Again, you would find that this approach is similar to the polynomial regression function that we discussed at a weekly level on those weekly candles. Instead of applying them at weekly level, this is applied at a daily level. Helps identify if the hypothesis is only DCing Algo whenever the risk level are less than 10%. This provides a range where although you can say from the 62 cents till about 9 cents there was a significant drop, but no single model could have identified if when the price was at around 50 cents where the price will go. But you can see during the bear market, when the bear market ended, the model did a decent job of identifying that the risk levels have now increased, and then towards the end of September 2024, Now again, establishing a risk level of about 11%, the SMA model slightly higher risk. Per this model, this is a more conservative model. A 54 cent Algo till about, let's say, 77 cents would be considered moderate risk based target, and 81 cents till 93 cents it's a higher risk target at this point in time. The shape of regression function again, it can change in the future, but at this point in time it has an upward bias. The last but not the least, the model that we are considering is the time weighted average price model for Algo. The relationship between the price and this blue line, which helps identify how much time Algo has spent at some of the key price levels. Per this model, any price below 48 cents is considered close to zero risk, because the hypothesis this is that this model helps identifying a range for accumulation above this range. If the token has a new all-time high in store, DCing above this range is not the worst idea per the model. You can see per this model, Algo has been in this accumulation phase since about May of 2022. Now the composite of all the three models is this estimated bull run target for Algo, based on all the risk levels and what the reward could be in a bull case. The latest price, the DCA model, the time weighted average price, and SMA risk levels are weighted together. Weighted risk of Algo coming in at around 12%. Estimated bull run peak per the risk reward approach is coming in at around $2 for Algo for this bull run, and the reward from here is at around 7.5x. With this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe and give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.